Good morning. It is 6 a.m., half an hour before we're going to open on Wednesday, May 29th. Yesterday, we had a fairly inactive day. We ended up pretty much exactly where we opened. It was a tiny bit higher than the previous day, but we've been in this choppy region for almost 2 weeks now. Today, we have the first potential of volume coming back into the market. So that's what we're going to pay very close attention to. If we get volume back in the market, then we have the potential of getting directional. Right now, you can see in the pre-market, we are down and we're towards the bottom of this range. So all it takes is some continued downward momentum for us to move downwards. Otherwise, we're probably going to pop up towards the top of the range, and then we'll see tomorrow. Tomorrow is the more likely day for us to get directional because tomorrow is the day we have the GDP report before the market opens. It's also where we'll most likely be fully staffed at all the institutions. Today will be pretty close, and then for sure by tomorrow we should be, or the people who are coming over are going to spend some time catching up today, and then we'll be fully ready to go tomorrow. So we could get directional today. If not, then potentially tomorrow is a higher probability. And for today, it's looking like we're flirting with this purple line that we drew over here. And if we break, then we could start moving towards the MA50. So let's take a look at how our futures are doing and see it should be pretty clear that they're down, but we'd like to see exactly how far down they are. S&P 500 down quite significantly, about 75 basis points. The NASDAQ down about 80 basis points, and the Dow down about 66. So they're all pretty close in line with each other. They're all significantly down. So there is definitely some downward momentum this morning. That's what I've been talking about, how we have a higher probability of breaking this range to the downside than to the upside, but we haven't broken that range yet. With the pre-market, we're just flirting with this purple line right here. We haven't broken it yet. So what do we need to see in order for this to come down? Well, let's take a look at our VIX. Our VIX is up here, pretty close to the 14.25. It's 14.18. Looks like it so far this morning has only gone upwards. So one of two things will happen. It will continue to move upwards towards this 15 area, in which case we will probably break that purple line, or it will come back down and fill this gap, in which case we'll have relief. If it comes down and fills this gap, then what you'll want to look for are stocks that did very well, that were very strong during the morning, and those will break out higher. And if not, then we want to find the really weak stocks, and those will break lower as this VIX continues to move upwards, or if it continues to move upwards. So VIX is going to be very important to look at. We had a example VIX trade about a week or so ago. And so with this gap up, it's probably a good idea. We put it on somewhere, one of these bars before this, either when the green went up or one of these red bars right here. So it's probably a good idea to take that off. So let's take a look at our saved trades over here. And wow, they're all, that's pretty unusual to see them all green. I've been doing really well lately, I guess. VIX right here up at 53%. I'm not sure if that includes today's gap up movement. So irregardless, if it does or doesn't, if you put this trade on, it's a good idea to take some profits right now. That's looking very good. I'll go ahead and close this trade as if, I don't know if this includes that gap up, but it doesn't really matter. This is just an example trade, so I'll just go ahead and close it. So let's take a look at our TLT. TLT breaking down hard yesterday, down through that horizontal level that I was talking about, and we are on our way downwards. This does have to get closer to the bottom of the channel, not necessarily to the exact bottom of the channel, but probably at the very least 89.5 level. We also had a TLT trade. Let's take a look at how that was doing. So just to remind ourselves, I first suggested a TLT trade somewhere around here. And so we should be at about break even, maybe a small profit over here. And then when we hit the top of the channel, I suggested it again. So you're definitely in profit if you started over here. But I think the option strat trade that we saved was somewhere around here. So let's take a look at how that one did. Well, obviously it's in the green because when we just looked, everything was in the green. But let's see how far in the green. Yeah, so we're just up slightly, 4.2% on that put. So that means that we saved it around here. And it does look like we have at least a little bit more to go, but we could get down to the blue dotted line over here to the 88.5, or we could maybe potentially go all the way down to this channel because we're not at zero yet, or I'd be very surprised if we're already at zero for July, but I doubt it. Yeah, we're not at zero yet. We're only at 10.2. So this does have to collapse all the way to zero by July 31st. And so we still have plenty of room to go. We chose a nice long option, either August or September, to give us plenty of time to span that July 31st deadline. So we can just keep on hanging on to that, and that should continue to do very well as we retrace downward. Today, though, looks like we are moving quite a bit. Well, we're already at the 89.5. So the movement, we might retrace a little bit. And if that's the case, that'll take pressure off of the S&P 500 and it will just float back up into this region. So let's not get too excited that we have a very downward bias in the futures. Today's not necessarily the day that we go directional, especially with the GDP report. So if I was day trading, what I'd be looking for is a potential bounce, either a bounce or a confirmation. Let's take a look at the intraday. So we drew a line over here at yesterday's low. If we break above and then perhaps bounce and then go up, then I'm probably going to day trade long. Or if I was going to day trade, I would day trade long. Otherwise, we may hit this level and come back down, or we'll just come right back down. And if we break the 524 level, then we'll go to these two. I should just consolidate these two into a 522 level because it's just a region. So we'll go down to this 522 region, and if we're really weak today, we'll go to this 520 region. Let's take that in context of the daily. So if we go to 520, then we are at this mild horizontal support and close to the MA50. And that'd be in a single day. We're probably not going to get that much. More likely where we hear this EMA 20 is the 522.91. So that 522 region is probably the more likely level that we could end up at if we get that downward bias today. If the downward bias today continues to hold, I should say. So today we're going to see if we get directional. We're not necessarily going to expect it to be directional. And then tomorrow with that GDP report, we'll see if we get directionality then. So I won't get too aggressive today. My portfolio is still mostly neutral, slightly bearish. Today, you can continue to hold that slightly bear, but it looks like it might be a good time to take some profits because we are opening with such a downward bias. So either at the open, if we continue to move downwards, then consider taking some profits. Just watch it carefully if you're able to time. Otherwise, you would have put your orders in last night in order to take advantage of this downward movement. And then starting from a neutral or only slightly bearish position tomorrow with the GDP, then after that GDP comes out, we can decide how we want to rebalance our portfolio, or if we could just keep it that slightly bearish. what would we focus on? Yesterday, we talked about sectors that were weak. And we especially identified XLY and retail as being weak. Interestingly enough, if we look at our earnings that are coming up this week, we've got Costco, that is retail staples. We've got, well, these are more tech, somewhat retail tech. And I thought we had more of Dollar General, another one. I thought we had a lot more. Hormel is staples, Ulta, retail, Dick's, retail. Wonder if I can sort this by sector. Sector, there we go, there we go, there we go. And we will see consumer cyclical. Those are all retail or discretionary. Look at how many consumer cyclical stocks we have reporting this week. So we'll get some really interesting data. And if they're not doing well, which I'm suspecting they're not, that given the consumer sentiment, yes, we had a stronger consumer sentiment yesterday when it came out, but in the past few months, it's been declining. Yesterday is the first time it popped up. And when it popped up, it's not like it popped up to really high levels. It just took out the previous one. It was just higher than the previous one. So most likely these are going to move downwards. You could have a lot of interesting earnings plays. So I'll probably take a look at those me personally later, or well, I only have till today because they're all either reporting tomorrow. They're probably not reporting Friday. So today is going to be a flurry of earnings potentials. I wish I could show you guys that, but we don't have time. It takes a little bit longer to evaluate these earnings plays. So most likely we'll never be able to have a chance in the pre-market. Anyway, maybe we could take it sometime in the post-market, but today it would be too late because we need to prepare ahead of time for it. We need to put in our trades ahead of time in order to take advantage of earnings. But in any case, we have retail and consumer discretionary coming up a lot in the earnings. And so we do have potential to move. So the S&P 500 might be going sideways. The consumer discretionary, it looks like it was going sideways. We got a strong movement downwards yesterday or 2 days ago. And then looks like we're maybe getting a little bit of directionality back. And then if we break below here, we could keep on going down. And what I'm saying is that we have the catalyst available to us today and tomorrow for the potential for us to break down. So XLY could really move, and having some shorts in the consumer discretionary or retail sectors could be a very good idea if those are what you're going to use in order to lean your portfolio downward. All right. That is pretty much all I have for today. Everything is looking pretty clear. Not too much has changed except our downward bias has been confirmed, but not to the point where we would expect us to pull back yet. We still have to break this support level before we really decide that, hey, we're in a true pullback situation. So far, we're just at the bottom of the sideways choppy range. Okay, that is it for this morning. I'll leave you guys to prepare for the opening, and I will see you in the post market.